Good morning, this is Larry Edelson with my Uncommon Wisdom video market update for Monday. I'm actually recording this video update on Wednesday, February 29th due to my travel plans over the next few days. However, the action that we saw in the markets on Wednesday, February 29th is very significant. And I don't expect many changes in the intervening days between I'm recording this video and when you see it on Monday. The all-important action I'm referring to occurred on Wednesday, February 29th, and indeed, that being the month end, it is very, very important action. Let's go right to the charts. First up, gold. As you undoubtedly already know, and as you can see from this chart, on Wednesday, February 29th, the gold market had a $76 to $80 down day. The rally failed above this support level here, and gold plunged, giving up almost 2 weeks of gains given up in a single day. Now, it's very likely that gold may rally back to the 1742 level in here, this resistance area here, but the action that occurred on Wednesday, February 29th is very significant. Gold did not elect a monthly buy signal. That is very important. After all this rally over the last month or so that had everybody upset, and many others jumping into the gold market, gold did fail to elect a monthly buy signal. To me and my systems, that indicates that that there's still a very, very high probability that we will see gold move back down with the initial support coming in around here at 1625, 1635, and a distinct possibility that we could go into late March, early April, testing sub $1,500 levels. So, if you've acted on any of my advice to take on some short-term bearish speculative positions in the gold market and or hedge up long-term core gold holdings, I recommend that you hold those bearish positions and hedges, because it appears to me that the short-term gold rally is over and we will retest support levels. The same can be said for silver. Here's a chart of silver. Silver had a massive 6% down day on February 29th. Again, month end. Interestingly, we were well above the $35.85 monthly buy signal that I've been telling you about. But on Wednesday, February 29th, silver plunged over $2.25. Failing to elect that buy signal on a month-end closing basis and putting in an outside reversal day and falling back into this declining wide trend channel that you see here. So silver, like gold, remains poised now to test at least the $32 level, and once that gives way, we can see sub $30 levels, at least 28, and maybe even lower going into April. The interim rally here is over. The long-term bull market in the precious metals is not. The fact that the European Central Bank is printing money now, the Federal Reserve is printing money, many other central banks around the globe are printing money, does not mean that gold and silver and precious metals are going to explode to the upside. Money printing is a long-term bullish fundamental, but it does not have to be bullish every day of the year. Every day that they're printing money. That does not mean that gold or silver has to go up. There are contextual situations and conditions where money printing can actually be bearish for the metals, and I believe we have that in place right now. One of the reasons is they're printing money like crazy to save the banking system in Europe and to save Greece, but Greece is not going to make it. Greece is going to default, as sure as I know my own name. Greece is going to pull out of the European Union, take back its drachma, and as this unfolds over probably the next 30 to 60 days, yes, the banks may print money like crazy, but again, that doesn't mean every day is going to be up for gold and silver. Quite to the contrary, as the euro disintegrates and Greece defaults, you're going to see savvy investors and not so savvy investors run to cash, and that's going to be bullish for the dollar and bearish for just about all commodities out there. So, again, money printing doesn't mean everything has to go up day in and day out. Far from it. You have to know when money printing is bullish and when it's not. And that's my take on the fundamentals right there. Let's now go to the dollar. The dollar has been acting weak overall, but lo and behold, on February 29th, the dollar did put in an outside reversal day. It is finding support in this level, and the next move in the dollar should be higher up to the near 81 level, and if we can get through that, probably to new highs up near 83.50, 8400, which as the dollar moves higher on a flight to safety, that will be overall a general bearish tone for commodities, particularly gold and silver. I want to go now to the Dow Industrials. This market has given me a monthly buy signal with the Dow closing above the 12,850 level that I've been writing about on Wednesday, February 29th. This is a very early signal that the Dow Jones and the S&P 500 are going into a long-term new bull market that will find stocks trade substantially higher in the years ahead. That does not mean you should run out and just buy stocks wholesale right now because we got a monthly buy signal. Indeed, I expect some kind of pullback along with metals and along with a general liquidation tone that might take root in the markets over the next few weeks. But it does give you, that buy signal in stocks does give you an indication that a new bull market in stocks is here and it's coming. I expect by 2015, 2016, we could see the Dow close to 20,000, if not higher. So there's plenty of money to be made on the upside there. Now, the focus in the Dow should be on buying dips rather than getting all out bearish. For now, I recommend holding any short-term bearish positions because, as I said, there's likely to be a pullback in the Dow, and I would look to get out of those positions at lower levels and start picking support levels to get positioned for a new bull market in stocks. Having said that, this is Larry Edelson. I'll be en route back to Asia over the next couple of days. I will talk to you next week. I will give you extensive updates on all these markets. This is Larry.